Sir John Templeton, another great investor, said to buy when others are despondently selling and to sell when others are enthusiastically buying. In the stock market, the greatest investors always seem wrong because they do the opposite of what the mass is doing. Think about this. Financially speaking, the rich makes up a small percentage of our population. So why would we follow the mass? If you follow the herd, you're probably going to end up with average wealth or worse. But if you're going to follow those people who excel in the stock market, then you will have to be comfortable looking wrong all the time. You will have to resist the fear of missing out when everyone is super excited to buy the next best thing. And you will have to have the courage to buy when everyone else is selling great investments out of fear. For example, if the mass is telling you that a certain stock is dead or dying, but you look at the company behind it and you look at their financial statements and you see that the revenue is growing, their cash flow is increasing, and their profit has never looked better, the odds are the company is still doing well. Trust me, it would take great courage to tune out the noise and take advantage of these opportunities to buy stocks when the prices are falling. This is what makes investing hard. It's not the numbers, it's the emotion. Another example is when the mass is excited to buy a stock that you currently own, and because of the popularity of it, the price skyrockets way above what you think is worth. At that point, it will be hard to sell your shares because you will have the fear of missing out for that potential gain that you can still make. But we cannot succumb to that greed. We have to fight that FOMO. Therefore, we have to be able to do our own research and not follow blindly. We will look around to the majority, but our pockets will be where we need them to be. Watch this next video where I talk about investing in hype or popular stocks.